Yeah, so, as of now, alternative is kind of more, I would say, resi, co-working, co-living, but there's also part of the alternative space that is not covered as of now, which is, I would say, a sub-segment of the industrial sheds galaxy, which are the data centers. And by discussing with the few actors that are trying to work on that segment is really fascinating, because as of now, it's a kind of the format that the sheds and the light industrial was, I would say, 15, 20 years ago, where basically you have on one hand large players, I would say 2, 3, that are kind of dominating the market and dealing directly with, I would say, users, and obviously end users that have the scale or the need to run and to develop such kind of format. But in between, there's no real institutional money or institutional behavior to secure, valorize, and then sell. Well, there's no kind of cycle within the segment. So, and as you know, data center is critical for obviously the phone, the cloud, and everything, and it's getting more and more pregnant within the close urban part, or close to the, I would say, mature and large power point around the cities. And just giving you an example, I was discussing with many actors that are acting within the, I would say, more industrial, urban industrial space, and they were saying that as of now, getting a data center within their space rather than urban logistic and even last mile logistic was more favorable to them, as the rent they can get from such kind of actors is increased by, I would say, 30 to 50%. So a lot of actors like this are trying to get rid of the historical tenants within the space to get and to attract more data centers players. So I think in the next coming, obviously, months and years, this is something to be really interesting for, I would say, institutional money and real estate, cycle investors to play in.